conversations with Dtravel, and I'm telling them that the value from the network, which is growing exponentially, hasn't been translated into token value. So we have thousands of listings now, we have thousands of hosts, more and more listings are onboarding. The application works. It's a true peer-to-peer application, which means that you and I can transact directly without the need for a third party or any kind of centralization involved. Yeah, which is correct, which is basically what this is all about. It's about cutting out the middleman, and none of that has been reflected into token value. So basically the biggest problem is the tokenomics. The tokenomics is trash. None of the value that's been built around the application or the technology, and the technology is off the charts, because we're about to launch an AI package which is going to allow the consumers, the front-facing consumers, to search for properties all the way around the world. And all of these properties are going to be direct bookings. They're not going to be properties booked through Airbnb or through booking.com or through the other platforms. And there's no such thing. It's like right now, if you want a direct book, you have to Google search and hope that you can find the property that you're looking for, but you initially have to search for that property elsewhere and then try to find it directly on Google or Bing or whatever, on search platforms to try, and if they have a platform, a direct booking site, and if you can find it, and then you might get lucky, you might be able to book it. So actually this AI package is really amazing, but even with all of that's being launched, none of that value is going to be reflected into the token. So that's why when you look at the token now, and let me share my screen with you, because I'm streaming this screen. Oh, this is the wrong token. LTC. Let me go to the right token, which is trvl. And can you see that, David? Are you there?
Yeah, I'm here. I had it muted.
No worries. I just wanted to make sure that you hadn't vanished. When you look at the token value and the token price, let me do a range pool. Let me get rid of this. Let me hide this, because that's meaningless at the moment. And then you can see the dynamics of the price action here. Launch price 9 cents. That's when it was launched on 3 exchanges or 4 exchanges, however many exchanges they launched on. That was the day. It was D-Day, and the price went from 9 cents. So basically the way it works is that you have this initial distribution offerings. They get investors money, like a few million or whatever, $1 million from different investors. They get token at 9 cents. They use that money to launch their token on different exchanges. So whether it's MEX, C, or whether it's Bybit, or whether it's KuCoin or Gate.io, there's 4 major centralized exchanges right there. The price shoots up because there's initial interest in the token price, right? And so as you can see, what happened was the value went up immediately on MEX. It went up to 74 cents. So it went from 9 cents to 74 cents. Actually, on that day, it peaked at $1.7. Yeah. So whoever was initially invested had a 10x on their investment right there. So whoever invested $100,000 pre-launch had $1 million worth of token. And on day 2, actually this is a 3-day chart. So in the next 3 days, the value, the price went up to, on MEXC, it went up all the way up to $1.56. You see the volume increase. You see here, the volume increased. What does that mean? That means these idiots were selling. Whoever was here at the beginning was selling at the top here. They weren't holding on. These volumes suggest this one is terrible. It's a terrible candle. When you're contemplating candle structure, yeah, this is a really bad candle because it's a high volume. You've SFP'd, you've taken the liquidity from the previous candle, you've closed under the high, you've got increasing volume, yeah, and then the next candle is confirmation of what we have just experienced, which is a sell-off. So let me draw a line here to show you the range. So based on candle theory, let me just close. Hold on, my WhatsApp is binging. I want to close that down because it's making noises. It's annoying. Let me close that down. Yeah, closed. Let me come back to the screen. Let me zoom it out. All right. So you see, what you've got is you've got your initial range. Now you'd expect this kind of range to be quite bullish because we're ranging in the wick. You see that? We're in the wick. So even if you didn't sell, you could imagine that this could go up and just range for continuation, right? That's what happens if with bullish market structure. But the problem is this volume that came in here that left the project never came back in. So you had more sells here. Now this is the beginning of a bearish reversal because this next candle, this next 3-day candle closes 50% lower than this previous candle. So that's your first indication of a bearish reversal. And then the second candle, this one, it not only did it close underneath this the range low of this wick, this initial bullish wick, it's got a long wick underneath it going all the way down to 52 cents. That's a market sell on the 3-day candle. So the price is dropping and people are just panic selling. So ultimately what's happening here is that whoever was invested from the beginning was selling, yeah? And whoever received tokens was selling. No one was buying here. This is all sell. Sell, 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 sell. This is quite deceptive because even though you close back into the range, the problem with this candle is that you're in the lower 50% of this candle. Like if it was more bullish, if it was a proper red, it would close higher into this red candle and then it would hold, and it doesn't hold, it just sells off. So you couldn't really, with this candle, this isn't enough to buy. That's basically continued selling, more selling. So maybe some people bought back in, maybe someone sold up here and bought here, but actually the market was selling off. And effectively what you have is that's terrible. Look, when you zoom in, like really zoom in, look at this candle, look where it closes. It closes underneath. What the hell? I don't know why my thing doesn't work sometimes. See, it doesn't work. How weird is that?
That's weird.
Why does, huh?
Have you got it in log?
Yeah. It's just not working. That worked. Mute copy it. Can't copy it.
Oh.
Yeah, I know. It's weird, huh?
Refresh your chart. Back in 2 seconds. Carry on with it.
Refreshing. Oh, it's gone to Bitcoin. I'm at TRV out. So when you go back, oh god, look at all those lines. Shit. I guess it did work. I didn't mean to draw those lines. Shit. I'm closing. Yeah, so when you look at the 3-day chart and you're basically looking at candle theory, you just... Oh, they're red now. It's a bit annoying. Doesn't matter. That's the range. You've basically lost the range. You're trying to get back in. If you wanted bullish reversal, you'd have to reverse the full extent of this candle. You want to reverse that for confirmation of getting back in. You need this candle to go up. Oh god. You need this and the next candle to close up. Then the next candle, you could buy the next candle, and you're looking to get in as low as possible for continuation. That would have been like a deviation from the range. It wasn't a deviation from the range, and the problem was that you had all of this green volume. It SFP'd the previous candle high. It closed inside the range. That is bearish. Closing outside the lower range, that is bearish. Not being able to get back in with strong enough conviction is bearish. Selling off, bearish. And then what's the confirmation of this bearish reversal? Is exactly this. I'm going to show you. Basically, when you really zoom in, like ultra zoom in to the price action, the bottom of this wick is and look where the candle closes. It closes underneath the wick, even by a fraction. We're only talking about, look, that's 0.61910, and here it closes at 0.61900. That is a loss of a level. And what happens in the next candle? I mean, from looking at it like this, you can't really tell, because it looks like it could have closed within, but it didn't. It closed underneath that wick. Immediate sell-off. That's a market sell. There was no hesitation. Yeah, in the next 3 days after that candle closed underneath that wick, people sold off, and we lost 22% of volume of price in that candle. That was another 3 days of selling. And then you lose that wick. What you would normally want to do is try and back test it for continuation. It was so bearish that the whole back test was front run, and this was another market sell. The back test was front run, it was sell, and it just the whole thing sold off. It was just a complete disaster for this token. Eventually, what happened was that it reached the launch price and it made its first all-time low. This is the first all-time low. Okay, making all-time lows is not bullish, it's bearish. Yeah, under no circumstances making an all-time low a good thing. It's a bad thing. You can't look at it and go, yeah, this is a good thing. However, after losing 9 cents, we reclaimed it with a bullish reversal candle. This is a bullish reversal candle. What's actually happened is this. This candle, swing failure is the low with pretty shitty volume. That's not good. However, the next candle loses 9 cents, which is a level. The next candle is acceptance. This candle is acceptance, but that doesn't hold. With increasing green volume, it was bought back. Okay, so you had interest. It's just that no one was willing to buy the dip. People wanted to see the price slow down, and ultimately, once you've made a new all-time low and lost this key level, that's the next level to beat. If this, for continuation, you really you would expect this next candle to sell off, to back test for continuation. The fact that it didn't was a clear sign that selling pressure was out, because you had this candle reverse this candle. So this candle was reversed, and so once that candle reversed all the way up to here, this whole structure is a reversal pattern, is a reversal structure. You could buy that, because exactly what happened. The price comes down to 50%, actually comes down deeper to 618, almost back testing this level, and you have a bullish expansion. You have another reversal pattern because this level is reversed, and even though it's temporarily lost, the reason why it continues is because well, look, it sold off and it was just bought back. Anyway, you have a huge volume coming on this candle, so there is buying pressure, so there is interest here. But ultimately what happens is that the price goes up, it back tests the first significant point of higher resistance, which is the bottom of that wick. You see, that is a perfect back test, and it sells off. And what's interesting about this sell-off candle, you've got high volume here. That's a market buy because the wick is on top. These candles are all inside candles, which is basically continuation. This green candle with higher with good volume is an indication that the price is going to go up. This inverse hammer is indication that the price is no longer going down. But as soon as the price goes up, what effectively happens is you swing failure level pattern this level, which is at 39.8 cents. You go up to back test this level. So these are all gone now. You can ignore these. Back test this level here. Look at the volume. It's more volume than this green candle. What that tells you is that anyone who was long here, all the way from here, was just looking for a break-even escape. They're looking to get out, because the reality is the price. Someone look at these green candles. 1, 2, 3, 4. Whoever bought here, down to here is down on their investment 72%. As soon as they're out break-even, they're out. That trade has gone wrong. They're not going to wait to see what happens. Ultimately, they're looking to escape, which is exactly what happened. That's a bullish, bearish reversal candle. It's high volume, swing failure, inverse hammer into the highs with high volume is ugly, is ugly AF. And then you just have a continued sell-off. You make another all-time low. There's 2 all-time lows on this asset within the first 6 months. That's the next all-time low. A long consolidation range, and ultimately you lose the level again to make a third all-time low, which is where we are now. And we're not there now, actually. After they make that third all-time low, what happened was, this was the beginning of the year. That's when Bitcoin started to become bullish, because it was at 15,000. We had this nice high volume run all the way up here, effectively clearing all of the liquidity here. But what was happening was that everyone who was in a long in this consolidation range saw this as an opportunity to exit, which is what happened. They all exited. So everyone here is break even, the price plummets, there's no bullish follow through, and eventually we see the 4th all-time low, which is where we're at. We've made a higher high, we have made potentially a higher low. For confirmation, we need to make a higher high. We need to take this out. Until we take this out with a higher high, we're still in bearish market structure. This right now doesn't look strong, because look at this. It's exactly the same problem. even though we've broken this 2-year, this is a 2-year trend line going all the way back to the all-time high. This was a front run, so you could argue this was a test, but it's not clear. So let's say that's a test. So that's 1, 2. You could almost argue that that's a test too, and that's another test. This line has been tested like 1, 2, maybe 3, 4 times, but it's actually been tested 1, 2, 3. This is the 4th time, which it broke. That's good. That's what you want to see. You want to see a break. But right now we're teetering actually. This is an SFP of these candles with good volume, which isn't good. You want it to be decreasing volume. You don't want good volume on swing failures, because that's the sign of reversal. And already the price is kind of falling, looking for liquidity. There's a lot of indecision here. Sure, it could fall back down. Try and pick up some more liquidity at these lows. Try and make another run. But then effectively what you're looking at on the higher time frame, we're looking at the beginning of an ugly pattern. We're looking at the beginning of some sort of maybe head and shoulders here. The neckline is going to make a new all-time low. That's what we're looking at now. That's the weakness in this asset right now. What we need is a new higher high. If we take this high, this previous high here, then we can have a nice pump. Take out all of this liquidity, and then we could be looking to make some kind of higher low here for continuation. Maybe higher actually. Probably here, because that would be the wave 3. Then you would have like a wave 1, 2, 3, 4, 5. And this 5 doesn't have to end there, it could end lower. But the point is, that would be your wave 1. And then you'd be looking to make a wave 2 for a big impulsive wave 3. Now, if we could, yeah, well that's the TA on this. Are you still there? No, David's gone.
Yeah, I'm still here. I was listening to all of it.
So basically when it comes to the tokenomics, I was saying to them, can you still see? Is it still streaming? Yeah. I was saying to them, it's all going wrong. None of the value from the network is reflecting into the token. Look at it. The token's already made 4 all-time lows. And the network is off the charts. Like I've done like 12 bookings. I've turned over like $29,000 worth of transactions. You know, it works. It's a working product. They've onboarded thousands of hosts. They've onboarded thousands of listings. They've got all of these. They're on all of these like channel managers now as an application on all these different platforms. They've got all these different partnerships. They've been on the Binance incubator. They've just received the grant from GRT to do some kind of integration with their protocol. They're developing an AI search platform, which is going to really be amazing, hopefully. And it's the first of its kind. And the token keeps on dropping. What's the problem? Well, you tell me. It's obvious what the problem is. There's no transference of value from everything that they're doing into the token. The token has no value. And then the kind of value that you want to give the token, I mean, you're talking about a multi-million-dollar project, millions of dollars worth of value. Yeah, that's big. That's not a small amount of capital. How do you create that value? You want people to bring all of that capital into this token. Why would people do that? Why would people sell their assets? They're very valuable assets. Why would you ever sell your apartment and buy travel?
No.
No. Would you buy Bitcoin with your apartment?
Yeah.
Exactly. You see, you would, because you know that Bitcoin is a store of value. You know that Bitcoin has a lot of interest. You know that Bitcoin is going up. You know that Bitcoin is a safe haven now. It's becoming a safe asset. Whereas travel isn't that kind of asset. Well, that's the problem. We haven't made it that kind of asset. There's no utility to create store of value. That's my argument. We need to create store of value. We need to turn it into a store of value first. Everything that happens afterwards is on the premise of TRVL being a store of value, and it's not a Bitcoin store of value. Bitcoin store of value is very one-dimensional in that it's secured by physical computers all the way around the world who are competing for this block reward, and in effect they're securing the network, but the utility is minuscule. It's pointless. Bitcoin's utility is non-existent effectively, because all you can do with Bitcoin is transact it, is send it or receive it. You can't do anything with Bitcoin. Now, sure, there's all of these kind of like DeFi, which allows you to wrap it and loan it and stake it using other protocols and other platforms, but that's not Bitcoin. That's using Bitcoin, but it's actually these other things which are doing all of the work. Bitcoin in itself has real low utility in that sense. So what we can do now is we can create a second version of Bitcoin. We can create a Bitcoin 2.0 in a sense, a store of value 2.0, but not with the current tokenomics. So I'm saying to them, we need to just basically copy Bitcoin, because everyone understands Bitcoin. Don't have to explain Bitcoin. People know what Bitcoin is and how it works. And effectively, that's what we have. We have a physical network of hosts and properties, listings, and they're processing transactions, bookings. Let them compete for a block reward, so that over a period of time, let's say the period of time is a month, you have 10 listings that have processed transactions on the network. So they're real bookings, they're real world value transactions where people have actually stayed at someone's property. We reward them at the moment by giving them a 3% back of their fiat value in travel tokens. That's pittance. Because if someone processes a $1,000 transaction, let's say a week stay, let's say you book my flat in London for a week, you pay me $1,000 in credit card or whatever, however you paid me, it doesn't matter. The reward that I get is 3% of that in TRVL at the current rate. Yeah, so 3% of $1,000 is $30. Yeah, that's nothing. When you look at Bitcoin and the way Bitcoin was, before the first halving, Bitcoin was rewarding 50 Bitcoin every 10 minutes. Every day, Bitcoin was rewarding its miners 7,200 Bitcoin per day. And here we are giving people back 3% of their booking value in fiat. Then that's part of the problem. Part of the problem is that we're conceptualizing the whole idea in fiat terms. We have to be looking at it in TRVL terms. We need to throw fiat out of the window. So what we need to do is say, well, look, 300 million of our tokens are already out in circulation. Just ignore those. 700 million are not in circulation anymore. Let's lock that up. And the only way to access those is through actual bookings, physical bookings, real world bookings. So let people compete for that value. So over a period of a month, let's say the block period is 1 month period, you have 10 listings and they all have all these bookings. Convert the value of those bookings as a percentage of that total month value. Yeah. And so in my example that I gave them, or I'm just about to give them, I say that let's say for the sake of argument, a block period is 1 month. And in that month, you're competing for 8 million TRVL, 8 million, right? And you have 10 bookings. And let's say one of the hosts has two bookings, yeah? And he generates 85,000 TRVL in bookings value. So what you would do is at the time the booking is made, because obviously a lot of the bookings are in credit cards using fiat, you would at that moment you would convert that into TRVL in terms of value, and you'd store that number. And over the period of a month, you work out how many bookings there are on the network. So for the sake of my argument, let's just say over the last 30 days there were 10 bookings, and let's say that those 10 bookings equated to a total TRVL value of 400,000 TRVL. And let's say that I was able to achieve 2 bookings during that same period, and my VAT contribution to that 400,000 was 85,000 TRVL. That's my contribution to the network. When you calculate that, that means I contributed 21.25% of value. And therefore, I will receive a block reward. And so what you would do is you would split that 8 million into segments, and the host will receive 40% of that 8 million. So I will receive 21.25% of the 40%, because you split that 8 million into 40% and another 40% and another 15% and another 5%. So 40% of it is a host reward. So I will receive 21.25% of the 40%. So basically my reward is 680,000 TRVL. That's a lot, right? But the reason why it's a lot is because the network is small. When the network grows, you have more and more bookings coming in, and now they're competing for the reward. Yeah, so it becomes more. So I'm obviously going to get less as the network grows. But the assumption is that as the network grows, the more value that's going to come in, and the value of the TRVL is going to go up. Does that make sense? So then you don't need as much, because it's like Bitcoin. It's the same with Bitcoin. Initially, there was only like a few computers, and then suddenly the network grew, and it became more difficult to mine Bitcoin, became more competitive. But then there was a proportional value. The value of Bitcoin was proportional to the difficulty in extracting Bitcoin. And it's the same thing here. The harder it gets to extract TRVL, the more valuable it becomes. So obviously at the beginning, when there's only 10 bookings, I'm going to get more TRVL. But down the line, when there's like 100 bookings or 1,000 bookings or more, it's going to be a lot harder to extract TRVL, and therefore the value of TRVL is going to be proportionally higher. That's only 40% of the monthly block reward. Imagine if the other 40%, so you split it into two 40s, imagine if that was a mirror reflection of the value that I achieved, but it was based on staking, right? So this is the hard thing. This is the thing that you have to understand. This is the hard part. Imagine if you could stake TRVL on my listing, right?
Yeah.
So you have TRVL in your account, you don't know what to do with it. You don't have any properties, so you can't compete for block rewards as a host. You can't do that. That's like having a Bitcoin miner. You can't do that because you don't have Bitcoin miners. Because you don't have a Bitcoin miner, you can't mine Bitcoin. Yeah, that's just makes sense. If you want to mine Bitcoin, you have to go and get a Bitcoin miner. What if you... It's the same with property. If you don't have a property, you can't host and mine TRVL. You need a property to do that. At least a property that you're willing to do that with. But imagine if you could just stake TRVL against other properties and participate in their block reward. So if you allocate 40% of it for the host, that's not touched. That's the host competing for the block reward, 40%. And imagine if they win, like in the example that I gave, with those 2 bookings, I was able to win 680,000 TRVL for me. But anyone who had staked on my property would be able to also win a percentage share of another 680,000 TRVL. So the other 40%. Does that make sense?
Yeah.
So let's say that 5 people have staked against my property, and it doesn't really how much they stake, but let's say for the sake of example, someone stakes 10,000 TRVL, another person stakes 20,000, another person stakes 65,000, another person stakes 2,500, another person stakes 2,500 TRVL against my property, right?
Mm-hmm.
Then you would split my reward, not my reward because I received that as a host, that's the 40%. That 40% would be mirrored into another 40%. So the same amount that I won would be replicated as a staking reward allocated to my property. So there'd be another 680,000 TRVL in rewards, which would go to all of the stakers who had staked against my property. And if you break that down into a percentage terms, it would be 10%, 20%, 65%, 2.5%, 2.5%. So the rewards for those stakers would be 68,000, 136,000, 442,000, 17,000 and 17,000 TRVL. They would receive the reward from my booking without me losing my reward, because my reward is the 40%. Then those people who had staked against my property would also receive a reward. They would benefit in me succeeding. Yeah. Now, as a host, if I wanted to, I could stake TRVL against my own property. Does that make sense?
Yeah.
So if I wanted to maximize the value of my asset, I wouldn't just host, I would also stake TRVL against my property. But even if I staked, like if I staked 100,000 TRVL against one of my listings, and someone else came and staked 100,000 against the same listing, then I would only be able to win 50% of the staking reward, because someone else had come and staked 100,000 against my listing. They would win the other 50% just by staking. So now you're giving value to TRVL, because now people can go, well, there's all these thousands and thousands of properties all over the world. I can now buy TRVL, stake it against all these properties, and if these properties are now doing bookings and they're doing really well, I can participate in the rewards that they're receiving without the host losing their reward. Now, if the host believes in their business model and in their property, they could host against their own property. They could be aggressive. They could, if they don't want anyone to share in the value that they're creating, they could stake more. The more that the host stakes, the more share that they have, the harder it will be for others to come and take that share. So like if I wanted to be ultra protective over my own properties and the value that I was generating, I would stake more than 100,000. I would stake 1 million on each of my properties. So even if someone would come along and stake 100,000 TRVL, they would only be able to access under 10% of the reward value which is allocated to the staking.
Okay.
Does that make sense?
It also makes properties kind of like, like on when we have, all these staking different products like on Coco, you could choose which ones to stake into, and each one gave you a certain amount back, told you exactly what you get back, kind of. That's kind of what you're saying. Properties will become like pot.
Exactly. Every property would be a pot, and it would only be based on the property's performance. You wouldn't know that. So you would have to diversify your portfolio. The only people who would know are the hosts themselves. They would know because they could see the future bookings. But then they would stake against themselves, and what the community would be able to do is see how the value is being staked around the network. That they would be able to see every property and how much each property had staked value against that property. And maybe you would also show if the host, how much the host had staked as well. And then you'd create this kind of element of investments where people will now be like redistributing their portfolio based on high performing properties, and it would become like an investment thing. So I think now I think that's going to like create so much value for TRVL. It's going to allow people who don't have properties to earn from properties just by staking. And then the thing about the block reward is you make it like Bitcoin. So 8 million a month is your block reward for the first year. And then every year, in my imagination, every year you reduce it by 25%. Called a quartering, not a halving, a quartering, but every year. So the next year, the monthly sum would be 4.5 million. The next year it will be 3.375 million. The next year it will be 2.53 million. The next year it will be 1.89 million. So you're always reducing the reward amount, and at the same time you're expecting that the network is growing, and the hosts will just earn TRVL just by hosting. That would be like mining TRVL. The rest of the network can stake their TRVL against properties to earn the staking rewards that property. Now the property doesn't earn anything for that month because it's got no activity. Well, that's a risk you have to take. You earn nothing. Whoever's staked against that property earns 0. Yeah, but that's the same as Bitcoin. Like with Bitcoin, you're going to have mining machines that are on and they earn nothing. Yeah, that's how Bitcoin is. And then suddenly they earn the block reward. Yeah, like you're creating that dynamic of competition and of risk. So you have to kind of spread your eggs. You like with Bitcoin miners, you can choose. You can say, well, I want to be in different pools and share in their rewards, or I could do it on my own and I'll probably end up getting no rewards until maybe one day I'm lucky and I earn the full reward. That's how Bitcoin works. And this is basically the same thing. And then what you would also do, because I've only said 40%, what you would also do is, I think in my mind, you would burn 5% of the token per month. That's just the block reward, yeah? So if your block reward for the first year is 8 million per month, you're burning 5% of that 8 million per month for the first year. But that's percentage is fixed, but obviously every year you're going to have a quartering, so you're burning less and less and less. And then you also have 10% for actions to secure the network, and then you allocate 5% for traveler rewards. And you the whole thing is based on a Bitcoin model where you have an allocation of 700 million tokens, and the only way for those tokens to be unlocked is through a reward scheme, which is competed for based on network activity. So it's all based on hosting and transferring the value of these bookings into TRVL. I think yeah, that's basically what I've been talking about. Anyway.
Yeah, cool. It's a really good idea.
I mean,
go with it.
I have no idea. When I was chatting to Eric yesterday, he was really enthusiastic about it. So, but I mean, it's a real kind of like, it's just changing the whole thing, completely changing the whole thing. If they go with this, I think this is like a $10 billion idea, basically, especially in the context of a crypto bull run, because you're creating a Bitcoin halving model, you're creating deflationary tokenomics through the burning, and also you're giving utility to tokens where they can be staked against properties so that people can earn in their rewards. So I've converted 12 bookings over the last year, and do you know how much TRVL I've earned? Like $800 worth.
Oh,
Yeah.
is that good?
No, it's shit.
Yeah.
It's nothing. It's really, it's pitiful. It doesn't give me like, it doesn't motivate me to go out and get more bookings. That's the point. Like, it's not a real motivator. And what's more, if people knew that I was getting bookings and they could earn TRVL, they would stake it against my properties. They could see that. Yeah, that would be the incentive. Like, if you knew, you'd be staking, you'd be saying, well, I know he's doing quite well. I can see the data. I'm going to stake my, instead of now just leaving my TRVL there doing nothing, I'm going to stake it. And at least then you can earn some more TRVL. But it's only going to be based on me doing well. And the wellness that I do is going to be in the real world. It's going to be real world value that that's the reward is based on real world transactions. It's not based on something made up. Do you know what I mean? But TRVL is looking shit right now.
Yeah, it's sad. What I was thinking about with TRVL is that I'll present quickly. Yeah.
I can hear you, yeah.
Let me just
Are you gonna share?
yeah.
Alright, let me just, have you shared?
Yeah.
Alright, let me just change my tab. I have to go into OB and change it to which one is it? That one. Is that the one? It's not it. It's not it.
I can see you messing around on the screen.
I'm trying to move it to your window, but I can't. It won't let me. Shit. There.
In black now.
No, it's working now. Right.
I'm just waiting for the delay to kick in.
Are you watching on the stream?
Yeah, I see it now. Okay, I see it. Yeah, I can see. Right, this is. You know, you were talking about the how did it, you were saying the launch price and everything came back to it. See that there?
Yeah.
Right. So I was thinking about this. So what I did was I was also thinking about it. I've been studying this stuff called initial balance. And what happens is when something opens in a session, in the first hour, is really where all the businesses are. And if you kind of see it in the 3-day candle, all of the business is done in this candle here, right? So what you normally do is price will trade inside that or trade out a bit and break away and come back to it. So I just marked out that 3-day candle. Big box, right? And then what I thought about was when you do a volume pull on the whole thing, right, it's not really helpful.
No.
Everything is down here. You've got nothing to go by. What I did was I split it into two things. Imagine this is the initial balance, and this is the value area, right? This is everything outside of that. Just wait to get back in, there everything came back down. So where we are right now is we're down in this range. We're not going lower. We're trying to climb higher to get back above this. But then the next target will be this value area low.
Absolutely.
Right?
9 cents.
Is, all the people that try to were buying here thinking this is going to go to the moon got screwed over because someone sold everything up here, or they probably bought in order just to dump it, get out of their positions up here.
Correct. That's what
and
happened.
It went down, and we started a new, like you said. So what we're going to what's going to happen next is that everyone that bought here thought this was going to the moon.
Yeah.
They might still be in, right? They might be here, they might be there, they may have got in right at the top and they're just waiting and waiting, right? They may have even got it here and we saw that trying to get it.
Absolutely, they're going to sell into that, 100%.
All of these are going to be resistant,
all of them.
These levels.
Yeah.
So they're going to sell, but what needs to happen is all of that, what we should expect is we should expect it to go up, sell off this, go up, sell off this, go up, sell off this, right? But then what we need to see after that is to see how much lower it goes. Yeah, let's just say it just gets to about here, levels out, comes back, and then we get acceptance into this range, right? And it stays there for a period of time. Once it stays there for a long enough period, that's acceptance. Not like this where it went out. It has to be longer than this. Yeah, it looped in and came back and got a side auction. We need it to get in above this and possibly above here. Yeah.
It definitely needs to get above there because that would be a higher high.
If we get above here and then now that I would say that would be acceptance there.
I think it needs to get above that point and then it needs to hold 9 cents because I think 9 cents is critical for this asset because it was the launch price. If it holds 9 cents after it goes up and makes a higher high, basically what you're saying is that people revalue this at 9 cents. They're buying back in at 9 cents. So and everything underneath it was a great buy. And
it was a great buy, but they're not going to be worried about it. They're just going to get in, and if he loses 9 cents, then they're going to sell.
They will sell, yeah, because 9 cents is the pivot as far as a horizontal value is concerned right now.
Yeah, exactly. So, yeah, I was just thinking about the psychology and the mentality of traders.
Yeah.
You know, we saw this, and I bought up here in like at 8, and then I was like, oh, forget it. I know it's going to go to 2, but I'll just wait. I just thought it was going to go down quickly and come back up. It's been grinding down.
Well, that's what we were hoping for. We were hoping that was a wave 1, and we were aiming for a wave 2. Yeah, but wave 2 never came because it made a lower low.
So I'm just waiting for it to get up here, and I'm thinking I want to sell, but actually I don't want to sell. I want to see it get here. I want to see it get up here. I want to see it get here, and then I want to see it go higher. And I want to go up here.
Yeah.
Or here.
And the other thing you have to remember, David, is if it gets up to 1.6, because there's no volume at those highs, for it to get to 1.6, the reality is it will probably overshoot, and there's no volume, and then there'll be so much kind of euphoria, hype, so much to the moon talk, that it will probably go up to 10, 15, maybe even higher. And this is what I was saying in a Twitter post yesterday, and some guy criticized it, but you know, whatever. I was saying if we get a Binance exchange launch when the price is in price discovery, i.e. above 1.56, then yeah, this is going to go up to 10, 12, $15. Why wouldn't it? Of course it will. It will 10x. Just in that exchange launch, it will 10x because that's especially in the height of the bull run. If Bitcoin is trading at like 150,000 or whatever, or whoever knows, 100,000, doesn't really matter. Anywhere above the all-time high, you get an exchange launch, and this asset's already above the all-time high. You're talking about a $10 billion asset right here. This because there's no volume. That's the reason why. And sure, everyone at the lows would have. I think everyone who's in now is probably going to sell once this is like a 20 or 30x up. So if you work out how much a 20 or like a 20x is quite a lot of investment on your return. So from where we are now, just do a 20x up, even a 10x, that's the 7x, go up, that's it, lower, 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 that's a 26, 24, there you go, that's the 20x there, that's 20x. So if you're in now with $1,000, you at that price you're walking away with $20,000. Why would you not sell? Of course you're going to sell. But the reality is there's no volume there. So if it gets up to that high, it'll probably go higher.
I think changing the model is better. Changing the model is better than just pumping the coin. Changing the model to something where the value gets stored in the coin. And
what we're seeing here is anticipation of the future, but there's indecision. We've made 1, 2, 3, 4 all-time lows right now, and people are waiting for something to happen because they know that they could, but they're not sure. You change your tokenomics model, this is going to go to 10 billion for sure, because you suddenly give people usage. Like people were like, oh wow, I can make money from staking now. I can stake on all these different properties. I can stake as much as I want, and I'm going to be a participant in this block reward. People will do it. You'll suddenly get people start buying this token up and staking it, and it becomes a real viable project. But I mean, I explained it to you. I don't know if you fully understood it, whether I explained it well enough. Yeah,
because I've staked this before. I know, like, to me, having travel, there's no point, because you can just, if I want to go on holiday, right?
Yeah.
Get a booking. I'll just use USDT. I'll use whatever I've got, and I'll use that. I won't hold travel for no reason.
And you know what's interesting about Eric was saying this to me, and I think he's onto something really smart. Because in my idea, or in our idea, I was thinking about 40% is going to go to the hosts, just by hosting, because that's the core of the Web3 application. It's peer-to-peer rentals, vacation. They deserve the largest share of the pie, because that's the network. The other 40% is the staking part, but you have to be strategic, because you can't. Some properties aren't going to perform well for whatever reason, and some properties are going to be amazing. You have to look at the properties, do your research, look at the reviews, look at the locations, look at the prices. You're going to have to do your research. You're going to say, well, I would go to that property, I would stay there, so I would stake on that property because I think that property is going to do well, and it's in a really good location. It's in London or wherever, or it's by the beach in Spain somewhere, and you're thinking to yourself, now I'm going to create a portfolio of properties all the way around the world, and I'm going to stake on them because I want to participate in their success. And the more you stake, the more competitive the nature of your share. And then also the more you stake, the more other people are going to stake, because it's going to become quite competitive, because it's all going to be based on percentages, and it will balance out. Eventually it will all balance out, because then the price of the token will go up, and then people will be like, well, I don't need to stake so much. I'll stake a little bit less because I want to spend some of this token now because it's quite valuable. I need to buy a car or something, or I need to pay some debt. It's all in equilibrium. But with the 5% token burn,
Yeah. Giving the host some incentive helps. If they can make a bit of money and then spend it on the property and make the property better, they're going to be, incentivized to do that. They'll feel like making their property even better and promoting their property more, just to kind of get more interest and earn more.
Well, I mean, absolutely. Like right now, there's no like the people that I've spoken to in Airbnb. It's very hard to get people off Airbnb. The incentive is difficult because Airbnb, regardless of the difficulties that people face with Airbnb, and I'm the Airbnb's greatest critic. You heard my story. I was burnt by Airbnb through COVID in a very tangible way financially, and there was no recompensation from Airbnb, and their support sucks now. It never used to suck. It sucks now. But ultimately, people still trust it because whenever there's a problem, they still have someone that they can go to and complain and argue with, you know. So
and then, like, I wouldn't want to give my money. I wouldn't want to do direct booking with some random on the internet and send bank transfer. It might be fake. Whereas with Airbnb, you can trust it.
You can trust, at the very least, that they can return your money. So you have to create a package which gives people the assurance. But to get hosts off Airbnb is not easier than you think, because they at the moment hosts pay only the professional hosts pay 15%. The Airbnb hosts who aren't professional are paying 3%, right? So why would someone leave Airbnb just to pay 3% on Dtravel? There's no gain. There's no net gain. You're paying 3% on Airbnb. You're paying 3% on Dtravel. Where's the gain? Where's the incentive? Okay. Well, okay. On Dtravel, maybe they can give their guests a cheaper rate, but for their hosts it doesn't matter because of the assurances. In their mind, they're thinking, well, if there's a dispute, Airbnb will resolve it. If there's damages, Airbnb will pay for it. And also, Airbnb is bringing in them the business. So why would they leave Airbnb? They're never going to leave Airbnb. And the money is not an incentive enough. Now, if you give them an idea where, at least in the first part of the idea, well, this idea is going to be lucrative anyway, because look at Bitcoin. It's still lucrative to go into Bitcoin mining now, 14 years after Bitcoin was launched. Obviously, it was more lucrative when Bitcoin was first launched because you needed less computer power and the competitive and it was less competitive. Obviously, it was, and the rewards were more, obviously. But that's how it grew. But it's still a viable business concept now to go into Bitcoin mining. You can still buy Bitcoin miners as long as you can get cheap energy or free energy through Solo or something like that. Then it's still cost effective. And that's the point. The point is that even now, if you're trying to get people away from Airbnb, you have to give them enough incentive. And at the end of the day, it's going to be about money. It's going to be about return on investment. Yeah. If they know that they can continue carrying on their bookings and get this token, and that's valuable because of the value that's increasing on this token. That's the other thing. Right now, the token is decreasing in value, so people don't value it. Once you start seeing the token go out, keeping on going up in value, then people are going to start valuing it more. But the only reason it's going to go up in value is if people buy it and hold it. Why would people buy it and hold it? Well, because there's a use for it. Well, what's the use? Well, now there's thousands of properties in the world, and I can stake my token against 1,000 properties. So I can participate in the earnings of 1,000 properties all the way around the world. That's amazing. How amazing is that? All of a sudden, you become a shareholder of all of these properties performing vacation rentals, and that network is then going to explode because all of a sudden people are going to go, wow, this is amazing. People are going to come onto that network because now their property is their Bitcoin miner. Whereas at the moment, their property isn't a Bitcoin miner. It's just a property which is doing Airbnbs or whatever. This is multi-use. But what I was saying is that 5%, was it 5 or 10? I think 5% is going to be for traveler rewards. And this is something else interesting, is like, imagine if you travel and then you write a review and you're obviously competing for the block reward. Yeah, it's all about the block reward. And 5% of that allocation is for travelers. And imagine if that's split amongst all of the people within that period of time who wrote a review, for example, or just traveled. But I would say write a review, because there has to be some kind of proactiveness to this idea. And then they received they received a share of that block reward, but it's allocated to the travelers. Now, it's not going to be significant, but imagine if that now, 1 year later, that reward increased in value so much that that could pay for half of their next holiday next year.
Yeah.
Yeah.
Cool.
How amazing is that? You go on a trip, Eric was saying this, you get a reward, and next year that reward pays for your holiday or half your holiday.
Amazing.
Yeah, how easy would it be to market that?
The same thing with air miles and things like that. You know, you have to reward people.
Air miles and that stuff doesn't really give you enough rewards to write home about. And the problem with that is that, yeah, it's not a, you have to create deflationary tokenomics, like deflationary, in a world where everything is rising in value and price, and where the value of fiat is decreasing on a really in a really tangible way. You have to, what you're creating here is something else. You're creating a store of value. That's what people are interested in now. People want to retain value, and for a lot of these assets, everyone is late. You know, like for gold, you're late. Effectively, you're late because gold has already gone up 10,000x or 100,000x since the beginning of whenever. You know, since 100 to 300 years ago, all of these royal families who had large amounts of gold and still has them, they're laughing. We can't jump onto that train anymore. But what you have now is crypto, and the opportunity for people to participate in this idea of increasing their wealth. But it has to, the pivot of what we do has to be store of value. And it's effectively with Bitcoin, it's so one-dimensional because we're chain agnostic, because we don't need to use one or two chains, we can use all of them. And because our network is a physical network, it's not an imaginary made-up network. We're not like, it's not like Pakoko where you're printing tokens out of nothing and just rewarding people with an imaginary token. Yeah, we're not making that up. This is based on physical activity in the real world, on actual transactions of physical interactions. That's the reward. And it's basically Bitcoin. You're basically reinventing Bitcoin. Yeah. I'm really excited about that.
Yeah, it's cool. I'm going to stop presenting.
Let's have a look. We've been talking too much already. But I mean, who cares? Let me have a look at, let me stop sharing. Let me share. Let me pull this
into. Watching the Chart Champion stream just to see what they're saying as well. I watch the daily updates every day now.
I need to get us onto the Discord, huh? So trvl looks like I mean, it looks like it wants to hold this level. Look, it's weird, huh? Oh, it's just come under it. Look at that ugliness. That's like a proper SFP reversal pattern. Close lower than this. Now we're trading underneath this. I mean, I should sell some, huh? Should I sell? But look, let me tell you what's interesting for me. You've got the 50 moving average here, this yellow line, and this is the 200 here. Look at that. That's a golden cross coming. Look, we had the same thing here. We potentially have we're right close to a golden cross right now. This is like,
normally it pulls back just before, so you get that pullback into the 50. Did it before as well, but it really has to push up because the lagging indicators, it might just stay and drop.
50. So, this is 50. This is not good. Look, this is 50 bars. So we're gonna lose this candle here. Tomorrow we're gonna lose this candle. We're gonna lose this one. we're going to lose these candles. So basically we could do it, it's possible. It depends if the price stayed above the 200, we would have done it easily. The fact that we're about to lose the 200 is not a good sign, because when you count the candles on the 50, this is 50 now, so we're going to lose this candle here. So basically we're replacing, at the end of today, we're replacing this close with wherever this closes. So that it still means the 50 is going to go up. Then we're replacing this one with the next one. Then this one, 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 and then this one is the one you don't want to replace, because that one is higher. And that will cause the 50 to start going down again. So based on this idea, I think we have 1, 2, 3, 4, 5, 6, 7. We have 7 days. If the price drops underneath this area in the next 7 days, then this 50, it will do this. It will turn, and it will miss the 200 just by a little, but just by an inch. What we actually need is for the price to maybe bounce. Just do that. And then at least then the 50 can carry going up, and then we can get our golden cross. That would be a golden cross. And that is a bullish idea. But here it was lagging, and it was almost a fake. This was a bit of a fake, because when it crossed, you're already in the highs. This is different, because you're crossing and you're not in the highs anymore. You're basically at the cross. So I think this is true. This will be real when this crosses. It won't be the same as what happened before. Oh yeah, all right. And then if you still look at the month, look at that. It's still struggling, you know, like the month is struggling. 3 month, look at that. It's hot. Look, we need to close above that wick. By the end of the month, we have to close above that wick. We have to close above that level. Otherwise, it just looks like it could sell off again. You know, 6 month. Again, I think this really needs to close above the 50. It needs to close above this level here. That's the level. That would be bullish. This isn't bullish. This is bearish. That's droopy. You want it to close higher. I think that's the level in the sand, that line basically. And then when you look at the 12 month, well, this is the only indication of something bullish right now, which is an inverse hammer with high volume. But there's no reason why we don't take the lows again one more time. And I think in my mind this is if we can close this month above that line, there's a good chance that we'll come back to test the 50 of the body and then go up. We won't even go down to test the lows, and that would be it. I think if we close lower or here or lower in this candle, like it's a really small body, not only do I think we're gonna go down and maybe take the liquidity from here again before we have a push up, I also think that it'll probably sell off by the end of this year at the top of this candle. That will be our target there. And maybe even lower, maybe there, 9 cents. And that isn't going to look great, because you might end up with like a weak candle, like a small body green, which could sell off again. there's no reason why this should reverse if we don't have a bullish impulse out of this pattern. So I think it's really important. I think it's really important that we close above the 50 of this body, and I think it's really important that we close inside this wick here. This is the mark in the sand. The alternatively would be another 3 months of bullish impulse and then a back test. So you still want, then you'd still want that. So you'd have, if we close down here, we'd go down, take liquidity, close somewhere up here with a nice green candle, and then still come back and just retest that level one more time before we actually push up on the next candle. And that would work too, but then you're looking for a push up next year, and you're looking to range this range in the lows for one more year, and then this push up, I mean, how bullish is it going to be? I mean, you basically you'd probably maybe end up reversing the up to here, maybe up to there, who knows. Is it going to be like a crazy candle? It's not likely. And then the other idea I had, but this is all going to be down to the tokenomics, because what I'm seeing on the highest time frame, if you look at the 3 day level, the 3 day candles, the tokenomics has to change, is I'm seeing this, I'm seeing no. I'm seeing this. You see that? That's what I think.
It could take longer. I think it could take longer. It doesn't have to be insisting the full run to do what it does.
I don't think so, bro. Like, I think when Bitcoin dumps, this dumps wherever it is. I think a lot of people, the reason why is because, look, let me show you why I think that. It's really simple. Why would I stay around in this coin hoping for the future when you have this coin? This coin.
Exactly.
Like, who's gonna look how bullish this pattern is? This is like ultra bull, dude. This is like the bull of bulls. Look at it. We're only at $26. Why would this not reach $200 or $300? Look at that. Look what it's just done. It's literally just, it's back to the all-time high from May 21. That's bull run. That's the bull run. It's back at the bull run all-time high. It's reversed all of that volume already. Look at all of this volume. This is the point. This is the difference between INJ and Travel.
This is like inverse, like the inverse of Travel.
Yeah, the volume's returned. People have bought back in. When you compare this, let me compare it with Travel.
No volume.
Yeah, none of the investors have come back in. That's the problem. Let me bring it up here. There it is. Actually, I want to get rid of these lines now, so they're just a bit in the way. Fixed range. Oh, that's on gate as well. Yeah, doesn't really matter. Actually, let me go to, I better like gate. Why is it gate? Is it gate? Alright, whatever. It's weirder. It shouldn't be gate. It should be. What's that one? KuCoin? What the hell? What happened to my? I literally lost. It just vanished. USDT Bybit. Hey, I lost my MX one. How annoying is that? I'll pull it back up. Now we're talking. Such an idiot. Right. So when you link it, oh god, I clicked on symbol. Such an idiot. Should be linked now, huh? So look where this launched. Hold on. So this launched a bit earlier. Look, this launched in October 20, and when trvl launched, so maybe you could argue that trvl launched at the wrong time, because this is when trvl launched. See that blue line? And oh god, just happened. And by that time, this was crashing. Look, effectively, what when you look at this, what's happening is exactly the same. The reverse. When you look at INJ, anyone who invested down here in the pre-release was taking profit in all of this run, and they had two chances to take profit before it crashed. Yeah, so all of these people took their money out, and you have the volume suggests that. You see that volume there? That's take profits. Yeah, but the reality is, you see all this volume, it's all come back in. All of that volume's come back in and more. And what's interesting about this price, in the same way that we're struggling with on trvl, we're struggling with the 9 cents mark, which is there roughly. With this launch price, if you look at the let me get rid of this interval. Get rid of these. If you take a mark on this price, when you take a mark on the all-time high on the launch, there. Or maybe not the all-time high, maybe the candle close, maybe there, somewhere there. See that? You see how the price, see on the close price of that first few days, it comes back, tests. So it couldn't get back in to this bottom range. When you look at this 3-day candle, it's the same thing that we've been saying. You have this range, and then you have the upper range. So it's not precise, it's roughly where it could be. But if I do it like this, that's the range now, above it. And so what happens is, look, came back once, held it as support, And then look at this increase in volume. Look at this. Look at that increase in volume. That's bullish. That's what you want to see. You want to see rises with increasing volume. The drop was a decrease in volume. That's bullish too. Yeah. And then this, look at that. Let me zoom in. Look at this perfect V-shaped recovery. And look at the volume on that.
Perfect. It's just a proper V-shape. It's going up, it goes higher, it goes back, and then it goes, keeps going.
Closes, that's a bear trap. The final confirmation is this candle, any one of these candles, that's a market buy. Yeah.
But even above, look at that SPX, look how it goes up even higher. Then it there's a little V, and then it's just carries on going.
Yeah. So you have this, look at this, January, 1st of January, December, January. This, from this recovery here, anywhere here, that's up 28%. When we were looking at travel in January, if you remember, it was here. This is January here. So when when travel was kind of trying to go up and go sideways, 19th of January, 22nd of January, 25th of January, 28th. Let me actually connect these crosshairs. Oh yeah, it is connected, so you can see. So you see they're matching up. Travel is going sideways, and look at the volume coming into INJ. Push. And so when the volume finally comes in to travel, INJ pulls back. And then when INJ recovers on this single green, you see this single green on travel, and look at INJ. That's the difference. Look at this candle here, and look at the INJ candle here, and that is a sign of strength. This should have done the same thing. If this was showing any strength, it should have done the same thing. But look, as you look at the volume, as this moves up, the volume is going up. That's the sign that you're looking for. As this goes up, look at the volume. It's going down. That's the problem. We needed an increase in volume, not a decrease in volume. And then as the price goes down, the volume's going up. That's not what you want to see. You don't want to see volume increase as the price goes down. You want to see, as the price goes down, wherever the price goes down, you want to see a decrease in volume. That's correct. Anytime the price goes down, you want to see the reds decreasing in size. You don't want to see them increasing in size. And every time the price goes up, you want to see an increase in volume. Or at the very least, you want the volume to remain flat. At the very least, you want to see the volume not go down or up. Just stay the same, like be consistent. And that would give you a bit more confidence that you're not going to get rug pulled. I'm not saying travel is a rug pull, but look, it sure looks like one. Investors came in, took their money, didn't buy back in. The volume isn't really showing anything. The only kind of slightly positive sign that I'm seeing here, slightly positive, is that here you've got consistent high volume on this little bit here. That's the only thing that I'm seeing that gives me a little bit of hope. But the context is key. Look where it happens. It happens on a swing failure of a previous all-time low. Of course, you expect that to happen. You wouldn't expect anything else. But right now, the price is coming down. The volume is... I actually don't think this is too bad, in the sense that it's not crashing down. You have quite a large amount of volume, almost the same as the green, and the price is taking quite a long time to come down. What we really want is the volume to drop off. We need that to happen. That would be the best case scenario. If this was a low volume drop, That would give me a more of a confidence in what's about to come. Right, so forget about trvl again, because we've been talking about it too long. INJ, let's see where the I had a trade plan for this, but I don't think it's going to work anymore.
No, it's gone higher. We had it lower, but then we were thinking, let's just go with it and see. I didn't look fully, let's see where it goes, and it just went higher. So.
Literally lost my chart. I don't know why the chart's. Why did I lose it? Why did I lose my chart? Where is it? There it is. 3D Binance. For some reason it disappeared. I've lost all my analysis. So annoying.
So it's the right chart.
I need to make a phone call.
Yeah, we'll catch up later. Maybe. I've got to do some stuff as well.
Alright, bro. We didn't really have a look at the charts though, did we?
Well, I was just looking. I'm just kind of following Bitcoin. I'm sort of like trying to day trade out and just I'm learning a lot of stuff on profile. And I've been setting up attacks to try and learn how to use it, how to get an edge using profile chart.
Did you see this this channel that we're back into it?
No, I didn't see it. I wasn't following that. But I was following it more. I was following more the triangle that it's done from lower down, and it's just, I don't know if it's bullish or what, but I'm just trying to follow the 30-minute candle to see where it's going. It sort of looks like it's holding, but I don't know for sure. It's not clear. You think it would go higher because there's some fingerprints above when it drops. So I'm thinking maybe we'll get back up there.
Look, we've reversed. Like for me, the key level to reverse. Basically, what you want to do is you want to refill this whole red candle first. Once you fill this candle, you're back in the range. Yeah.
Yeah.
It's simple as that. What are these ones? Are these lower time? Let me see why I drew these. I can't remember. Oh, you see, we're in this wick of that one. That's what these are.
Yeah.
For me, that has to hold. This line here. And it has. Look at that back test. And this one is also an SR flip. That's the wick. Once we're back above the wick, we're in the body. You can zoom in. I think ultimately, if you want to fill this long candle here, which is quite a big range, huh? That's 3%, and you're back in this higher range. You need a close above here. You need to get back into the zoom in. Not even that one, it's these ones. These are the more important ones. You get a close above there, then you can continue, you can fill the whole candle quite quickly.
Yeah.
So these are your levels now, I would say.
Okay.
One, get above there. Doesn't really matter how you do it. Range, go up here, and then we're up. This might, what we might see is this just kind of grind its way up. probably. Look, we've held a higher low. That's a higher low. We're making a lower high as well. So what we're in now is a bit of a like a bit of a triangle like this.
Yeah, that doesn't look good.
It doesn't look good, but it is not terrible. It's expected, isn't it?
Yeah, I think we can go sideways. Do that and then break out into the sideways range, and then maybe head up or head down.
Something like that.
Yeah.
I think what you want to see now is like another drop down, make a higher low. Here, maybe as low as possible. Get everyone really bearish. Again, one more drop. Drop and then buy it back up. Do a nice inverse head and shoulders. Break out. Push and then go up. And then rise back into that range. Fill that gap. Fill all of this candle right up to there. Then come back to retest these levels. See if they hold to continue. I think here you're making lower highs. I wouldn't expect an SFP now because you're making lower highs, you're making higher lows, you're in a triangle. So you wouldn't short, like you could short this not expecting an SFP because you're not creating that kind of price action where you're making higher highs.
Yeah.
Like you're not flagging. We're in a pennant right now.
Yeah.
So you could aim for the higher low down here somewhere. Worst case scenario, if we lose that, then you are actually looking for the opposite flag, like an actual flag, but it's the opposite way. But I don't think so. I think we're making a triangle. And ultimately, if you want to trade this, the best way to do it, I think, draw your range pool. You've got quite a big range, huh? From here to here. That's 3%. You could wait to make another drop. Just buy back in as it reclaims the value area, like that, just like it did here. See that? And then this is obviously sold off at the point of control. See, it's sold off, and it's selling off again.
Yeah.
So you might get another push down, reclaim, make another attempt. Maybe this time it will break up, hit the top there, come back here, and it will go up. Then once you're above here, it will fill that all the way up to up here. It will fill that, and it will come back down. Something like that. But if you're remaining bullish, the question is, should we remain bullish or not? Well, look. I mean, yeah, look, we filled all the volume on these candles, we've bounced off this level here.
Yeah.
There aren't really any more gaps here, are there? The gaps are full. There's a little bit there. There's a teeny bit of a gap.
Yeah, it all depends on where the value is. If people see this area as valuable, then it'll go up. If they don't, it's going to go lower today.
But that's a poor high, right? So if you use that guy's tool, weak high, it looks like a weak high because it's made these blocks. If that was a strong high, this would have closed much lower, and you'd have a higher wick. You'd have.
It can't be a strong high until it changes market structure more. Otherwise, it won't. like it has to come up, try and take the high, then fail, then that will change to a strong high. The fact that it hasn't tried yet
No.
just means
So I think you're expecting it to go up. I think we're going up personally. I think this whole volume has to be back tested first. So I think the long-term trade, the medium-term trade is to get back up to the bottom of this candle and see how that performs. Once you're up there, you're back in the range anyway. So you would expect it. However this gets back up, once you are back up there, you would expect that to back test and then try and go for a high. Take out that liquidity. But let me tell you something. Once we're back up there, after falling back down here, then there's no reason why we don't continue and go for that park that Daniel was looking for. You know,
yeah, exactly.
Like once we get back up here, then yeah, you would aim higher. You wouldn't just. This isn't a place to reverse. The only way that you would reverse here is simply this. You go up, have a massive SFP with a big wick and high volume. You close down here with like this and a really ugly red candle, high volume, another high volume candle matching this one. You close lower down here, big ugly wick, and you can sell that candle. That will be a really nice high, and then you have a confirmation that that's this level is solid.
Yeah. Also, the reason why I'm bullish at this level, I'm not getting lower, is that the open interest is still pretty strong, and from that low from yesterday, the CVD is pushing up a little bit.
Yeah.
So I think there's interest here. But I don't think it's gonna go lower just yet. And the candles aren't really showing it. Like the 1 hour, the 30 minute, we've got like, I haven't seen a reversal. Just on the 30 minute or the hour, there's no real reversal happen that I can see. Whereas I can see bullish reversals. Look at the 30 minute.
Yeah, I like this second bounce down. It makes a high low. You've got a poor low still. Let me see what his smart money thing says. Doesn't say anything.
It doesn't really work for the higher time frame.
There, look, it says weak low. See that? Weak low. To me that looks like a weak low. I'd expect that to be. And look at the see this one. It's going deeper. AA6. What about this one? It's almost at the AA6. Maybe this will come back down to the AA6. Maybe this will come back down to here. Yeah, I think that would be the target. AA6. It would line up with these lows. One more pass. You could just enter a limit there, bro. Line these up. Let me get rid of this. Let me close this. It's in the way. Let's do it. There. Next one.
Just got a run up. I always put my TT. So I'm looking down there anyway.
Yeah. Alright, let's finish and then let's maybe chat later or something. Right.
Yeah. Alright. Are you going to be free?
Yeah, I'm just going to be on the charts. I'm just going to have a look and stuff.
Okay.
Alright.
Alright, cool. We'll talk later, bro.